Hello traders, this is the weekend edition, good through December 23rd, 2012. And for Friday, the markets did drop. We have the S&P dropping almost a full percent. Same goes for the Dow. NASDAQ, same thing, 0.5% on the Russells, which did not do as poorly as the other indices. Banks off by 0.5%. VIX up yet again. We are knocking at the door of 18 on the fear indicator. Gold, metals do rally back a little bit from the big drop that it had. Gold up 0.4%, silver up a fraction, crude oil down 1%. And you have the U.S. dollar up 0.5%, so seeing strength in the U.S. dollar, putting pressure on the U.S. stocks. And trend pretty high here at 1.73, but we got a reading on Friday morning right at 9 plus, near 10, which is an extreme reading on huge volume flowing into declining stocks. And that was something that was noteworthy. And if you're not part of our Facebook page, definitely do that, because I did note that on Facebook first thing in the morning. Taking a look here, the S&P daily, you'll see we did have a sell-off on Friday. So this high base that we're starting to build is now under pressure. We're at a support level, and we're finding support at the EMAs. Those are exponential moving averages. Still above all major moving averages. The simple moving averages here, the 20 and the 50, the 100. So that is good. The problem is it's had a nice little run here, but we failed to reach this upper major trend line on the S&P. So if we start to break down, this could be problematic for the markets. You should see this slice through these moving averages. If you look here at the weekly chart, you'll see that we hit resistance, we come down, hit support, hit major resistance here, down here support. We come up and we're failing to hit that major resistance. We're not seeing that. So if we do start to drop, this will be our first lower swing high that we've seen in a while. It'll be the first lower swing high we've seen this year. And that could spell problems going into the future, because if it starts to break down and this area of support fails and this one fails, we're going to be in for a major correction, and this will be a shoulder, head and shoulder. This will be a head and shoulder trend reversal pattern on the weekly chart, which is huge. Take a look here at the monthly chart. Look at this blue line going higher and this blue line going higher. These two lines here, you'll see that we have support and support giving us this lower trend line. We have resistance, resistance, and resistance giving us upper trend line. Those two lines give us a rising wedge. We're at an area of resistance here. You'll see with this resistance here coming down to this resistance here that we're building a high base. We tried to go lower last month, but we rallied back. We are still hopeful here, still hopeful for a rally taking place on the long term if the markets don't start to drop. As far as the weekly is concerned, we have a better chance of dropping. If that happens, we will find some support, or we should find some support at this lower trend line. But gang, that's way down there. That puts us sub 1350, and right now we're at 1430. You get that sort of a drop in the markets, that is significant. So it's something that we're watching for. Let's take a look at the NASDAQ. This is the NASDAQ monthly chart. You can see here that we do so far for the month have a higher high and a higher low. But look at this choppiness just going sideways. But we are above all major monthly moving averages, which is good. We do have a major trend line coming down right here that should act as resistance. So it's something that we're watching for. On the weekly chart, here's the problem. We have support here, support broken now is acting as resistance. And if I blow this up a bit, you can see that we tagged it this last week and we rallied right back down. So that is a line that makes a lot of sense. It's been tested 1, 2, 3 times now. So if it starts to roll over, it'll be our head and shoulder trend reversal pattern. It's having a hard time getting over the area of resistance that used to serve as support. So that's problematic. Something else I want you to pay special attention to. You're only going to hear this here. But this is the 20-week moving average, this blue line coming across. This is the 50-week moving average, this red line coming across. In the last month, you can see that we've been pinched between those two. Normally, anytime price action gets pinched between 20 and 50 day, expect a major move one direction or the other. Now, we have a slight chance of a more bearish probability than bullish because of the MACD centered oscillator down here. We do have a lower swing high, higher swing high on the price action. So it doesn't surprise us that we did break a support line. We did find support at a major trend line, but we're rallying back up. So to see us drop here is certainly not out of the question and might even be probable. So be watching these two trend lines like a hawk, especially if you're in things such as Apple, Google, or Facebook. Apple, this is a weekly chart on Apple. It tried to find some support here, and it's finding that. I'm going to tweak that line ever so slightly here. So resistance, support, support, support. So it needs to rally here. But I'm telling you, if the Nasdaq starts to bleed out, chances are that will be spawned by a drop taking place on Apple. So it's something to keep an eye on. On the daily chart, we are in a big time falling wedge, which is more bullish and bearish, and we do have a gap down run up. There is a chance that if we get a higher step up on the daily, this could start to rally. If it rallies, going back to the weekly chart, this dude needs to get above this trend line. So we have support, support, it needs to bust above it. So that means we need to get, I would say, above 550. If we can get above 550, then we have an awesome opportunity. But there's a buying opportunity here, I think. If you look on the monthly, we're dropping, and these are some big, ugly red candlesticks on Apple on the monthly chart, but we did find support here at the rising 20-month moving average, which is $500. I think if it were to get back there momentarily, there might be a buying opportunity and hopefully get a nice little rally here. But Apple looks like it's in a lot of trouble. Take a quick look at Google. Google on the weekly chart, we run up, come back, boom. It looks like we're just going to get a lower swing high. It looks like we were ready for a down leg here. On the daily, kind of a bear flag. It looks like it's ready to break down, so be careful with any positions that you have here. Facebook had this high base going. Everything looked great as long as we stayed above the rising 20-day moving average. Now we are now below it on some volume. It's in a lot of trouble. Be watching that one. But on the weekly chart, look at these upper shadows. That's usually bad news. Every time it goes, makes these new highs, sellers are selling into those highs, bringing it right back down. But we're not losing too much ground here, so that is a good sign here for Facebook. You know, it may still drift down a little bit, maybe even a $25 buying opportunity for a rally there. Let's take a look at gold while we're here. Gold for the week broke a major trend line, so gold is broken right now. Gold is broken. We are below the 50-day moving average, but this trend line that it broke below is just bad. But you can see the 100-day moving average, 100-week moving average is act as support a lot. It continues to act as support, so that it still has a little bit of hope. But if it breaks below the 100-day, that's huge. It's really, really bad. If you look here on the daily chart, we're well below the 200-day simple moving average. We're trying to rally back a little bit here. One thing I do see is on this drop, we have a lot of big volume coming in. It could be capitulation. So if we do start to rally here, this could be a buying opportunity, but it's a little risky because of all the support that it has broke down below. So with that, a question for you. There's a lot to be learned in the trading markets, and I would highly recommend that you don't try to go out there and learn it yourself. I tried, many scores of individuals have tried, but they will bleed their accounts. Chances are you're down money in the markets this year. What I highly recommend that you do is ask yourself this one question: what are you going to do for 2013 to change your trading? So I highly recommend that you get formalized trading education. We're here to help you. Take care. Safe trading.
This may not be you, but traders who come to Grok Trade for help are sharp, well-educated, and have made money in the past. However, they weren't executing consistently nor disciplined in managing risk. They bought high and sold low. They let small losses turn into large losses. They kept losing money. This does not have to be you. They made a change before it was too late. Grok Trade students trade within the live markets with confidence. Get signed up today before it's too late for your trading.